All right, let's run a vector check for the US Open. While Wall Street was dark, the SEOUL market sent a signal you just can't ignore. We're seeing a major capital rotation, a shift out of what we call compute AI and directly into physical AI. And let me be clear, this isn't some prediction. This is a tactical breakdown of a capital flow that's already happening. You know, for the last 2 years, the entire market story has been all about the AI brain, the chips, the data centers, the potential. Well, this is the pivot. The smart money over in Asia, they're not just funding the potential anymore. They're aggressively buying the execution. The capital is demanding kinetic proof, moving from lines of code to the factory floor. So let's dive into the evidence. This wasn't some subtle, quiet shift. The Korean market just went through a really violent decoupling, a fracture that honestly reveals a crystal clear investment thesis, if you know where to look. Now, on the surface, you see the KOSPI index hit an all-time high, and you're thinking, classic risk-on signal, right? Wrong. Take a look at the heat map. It's a bloodbath of red with 2 giant green outliers. Samsung just holding the line, and then Hyundai, which is just exploding higher. This is not a healthy broad rally, folks. This is a battlefield, and it's showing some fierce internal conflict. And this data right here, this confirms the whole tactical move. Foreign money poured into the KOSPI, home to industrial giants like Samsung and Hyundai. We're talking an inflow of over 300 billion won. And at the exact same time, the KOSDAQ, which is full of more speculative tech and biotech names, saw an outflow of over 400 billion won. This isn't confusion. This is a deliberate, almost brutal sector rotation. Smart money is literally selling hope to buy hardware. Okay, so now we're going to zero in on the single most important data point from the entire Asian session, the one that really acts as the leading indicator, the canary in the coal mine for the US Open. 14.61%. Just let that sink in. This is not a number you expect to see next to a legacy automaker in a single day. This signal activation is our canary, and it forces us to ask the most important question of all: why? I mean, what on earth could trigger this kind of re-rating? Well, the answer is that the market is now pricing in physical AI. Hyundai's massive rally wasn't about car sales. Nope. The catalyst was the news that they are deploying Boston Dynamics humanoid robots into their industrial sites. The takeaway here is huge. The market instantly re-rated Hyundai, not as a simple manufacturer, but as a physical AI platform. This is the shift from potential to proven application happening right before our eyes. And this is where we translate the signal for us. A powerful move like this in the Korean supply chain is never an isolated event. It's a direct precursor for U.S. assets and sentiment. So let's build that bridge from the SEOUL close right to your portfolio for the U.S. Open. The correlation here is direct. It's a straight line. Hyundai's robotics move gives us a clear read-through for Tesla and its Optimus program. It validates Amazon's huge investment in warehouse automation, and it puts a massive spotlight on pure-play robotics companies like Teradyne. Really, the entire U.S. industrial sector, which you can track with the XLI ETF, is now on notice. The Asian supply chain is pricing in robot mass adoption, and U.S. allocators are going to be next. So if you're going to remember one thing, let it be this. For 2 years, the whole investment story was about building the AI brain, funding Nvidia chips and all the data centers. That cycle is maturing. The signal now is crystal clear. The next big phase of capital spending is to build the AI body, funding the robots on the factory floors. Okay, analysis is complete. Now we shift to the execution trigger. Because a great thesis without a catalyst is, well, it's just a nice idea. The data point that's going to either confirm or deny this entire rotation for the U.S. session is the initial jobless claims report. So here is your execution guide. If claims come in high, say above 220K, that signals some labor weakness, which could push yields down and give a little bit of relief to those beaten down growth sectors. But, and this is the big one, if claims are low, under 200K, that signals a strong, tight labor market. Now, that's bad for sectors that are sensitive to high rates, but it dramatically strengthens the case for physical AI. Why? Because a labor shortage is the single biggest driver for robot demand. So the tactical move on strong data becomes really clear. And finally, we have to apply some professional discipline here. Every single strategy needs a clearly defined invalidation point. This is our vector check. It's the line in the sand where the entire thesis is either put on hold or just canceled altogether. These are the critical levels for tonight. If NASDAQ futures hold above 25,150, the vector from Asia is validated. We can expect this physical AI theme to really expand. However, if the US market ignores this signal and breaks below 25,000, the vector is invalid. This wouldn't be a rotation anymore, it would be a warning of broader liquidity stress. And in that scenario, all long positions are canceled immediately, no questions asked. Look, the market is moving past the abstract promise of AI. The flow of capital is demanding tangible, kinetic proof of value. It's rewarding the companies that can actually execute in the physical world. The signal has been sent. The only question left is, are you positioned for the shift?